So, good morning guys. So, in your module, whatever you've got right now, if you come to the index, the first thing that you will notice that this is not your entire portion, this is only module 1. In module 1, what are we going to cover? First, we will learn the tax rates which are applicable for the assessment year 17-18. I told you yesterday that those who are writing in May and November 2017, for them the applicable Finance Act is Finance Act 2016. So, the assessment year for you will be 17-18. So, first we learn what the tax rates are, whether it is for an individual, HUF, AOP, BOI and so on. Of course, then we learn the basis of charge. After the basis of charge, we learn the 5 heads of income, that is salaries, house property, profits and gains from business or profession, capital gains and income from other sources. Post learning these 5 heads of income, we have certain other topics like clubbing of income, aggregation of income and set off and carry forward. So, by the end of this module, you will be able to compute what is the gross total income. Anyways, let's come to this later on. Let's understand one by one. Let's go to the tax rates. Now, let's get one thing straight. The budget 2017 had come out on the 1st of February. That budget is not applicable for you. So, please don't go through the newspapers, articles, comments on your social media and come to me and say, hey, that part we missed out. We didn't miss out anything. We are learning Finance Act 2016. Having said that, as far as individuals are concerned, if you see, for resident individuals, for other than individuals like HUF, AOP, BOI, the tax rate is quite simple. We have a basic exemption limit of how much? 2.5 lakhs. So, 0 to 2.5 lakhs, there is no tax at all. 2.5 lakhs to 5 lakhs, the applicable rate of tax is 10%. 5 lakhs to 10 lakhs, the applicable rate of tax is 20%, and above 10 lakhs, the applicable rate of tax is 30%. So, if I ask you, what would be the basic tax payable by a person who is earning, let's say, 6,50,000, what would your answer be? If the net taxable income of an individual is 6,50,000, come on, take out your calculators. I need you to participate. So, obviously 0 to 2.5 lakhs, there is no tax at all. 2.5 lakhs to 5 lakhs at the rate of 10%, so 25,000. And 5 lakhs to 6.5, that is the remaining 1,50,000. The applicable rate is 20%, that is 30,000. So, your basic tax is how much? 55,000. Now, please remember, apart from the basic tax, there are 2 cesses that we are going to learn upon. One is the education cess and the other is the secondary and higher education cess. Why is this component collected? In Finance Act 2004, the government of India said that they would like to spend little more on education, compulsory education, midday meal scheme and so on. To fund these activities, it was proposed to levy an additional 2% upon the tax payable. So, what we are going to do to this basic tax, we will add education cess at the rate of 2%. How much is that? What? 2% of 55,000. 1100 rupees. And in 2007, to fund senior secondary activities, to fund higher school activities, they said they wanted to add an additional 1%. So, SHEC 1%, that is an additional 550 rupees. So, the overall tax payable will be how much? 56,650. So, you see, for a person who is earning 6,50,000, the total tax payable will be 56,650. Now, in the illustration that we took, we have all round figures. So nicely all round figures. Is this always the case in case of income? Do you think everybody earns in round figures? So let me take your attention to two very important sections, section 288A and 288B. What do these two sections say? Section 288A says, if the net taxable income is not rounded off to the nearest 10, we should round it off to the nearest 10. Now, rounding off, there are two simple rules. The first rule, we must ignore the decimal. The second rule, if the digit in the units place is 5 or greater than 5, we will round up. Otherwise, we will round down. So, suppose a person's income is, let's say, 8,79,494.99. I want to know, how do we round off? 90? 95? 90. So let's see, let's understand. First, what is the first rule? We are supposed to ignore the decimal. So whatever may be the decimal, you will ignore that. And then whatever is in the units place, if it is 5 or greater than 5, we will round up. Otherwise, we will round down. So I will make this 8,79,490. So are we clear with section 288A? How do we round off net taxable income? Yes. Similarly, the tax payable or refundable. How can we get a refund from the income tax department? There is a possibility when the tax payable is lesser than the TDS that has already been deducted. I'll come to the topic of TDS later on. But understand, this tax payable, same rules will apply. The two rules. What are the two rules? First rule, ignore the decimal. Second rule, if the units digit is 5 or greater than 5, round up, otherwise round down. So overall, are we clear with the computation? Let me take you to one more example. Let's say that the net taxable income is 12,70,500. Come on, I want you guys to calculate the tax. 0 to 2.5 lakhs. Nil, very good. 2.5 lakhs to 5 lakhs. 25,000, okay. 5 lakhs to 10 lakhs at the rate of 20%. Now you tell me, how much more is left? 2,70,500 at the rate of, how much is that? 81,000, perfect figure. 81,150. Come on, do the total and tell me what is the basic tax? 2,06,150. Okay. Of course, to this cess, education cess at the rate of 2%. How much is that coming to? 4,123. And your secondary and higher education cess at the rate of 1%, 2061.50. So the total tax, come on, I need you to be a little louder. 334.5. Do we leave it like this or do we round it off? Acha, to round it off, first I will ignore the decimal. Then there is 4. So what do I do? Is that clear? Pakka? No doubts at all? Okay. Now, there is a concept called as rebate under section 87A. What is this rebate? Let us understand. See, it's a tradition that every year there was some increase in the basic exemption limit. I still remember, I think when I started studying tax, the basic exemption limit was 1,60,000. It keeps increasing. But you guys tell me, when the basic exemption limit is increasing, don't you think it is benefiting everybody in every class of income? Yes or no? When I say up to 2.5 lakhs, there is no tax. That means whether a person is earning 3 lakhs or a person is earning 30 lakhs, don't you think both of them are getting the same benefit? That means up to 2.5 lakhs, there is no tax. So India truly follows a progressive system of taxation. What is progressive system of taxation? Higher the income, higher the rate of tax. So 87A was introduced instead of increasing the basic exemption limit. For assessment year 17-18, the rebate under 87A is 5,000 rupees if the assessee is a resident individual having income up to 5 lakhs. Please understand, even if that fellow has 5 lakh 10,000, he is not eligible for the rebate. Don't call this as exemption, call it as rebate. Now what is the advantage of this section? It makes sure, it ensures that the benefit of rebate is only going to such class which is less than or equal to 5 lakhs. So let me do one small calculation. What if the net taxable income is 4,50,000? You guys tell me. 0 to 2.5 lakhs? Very good. 2.5 lakhs to whatever 4 lakhs, that is 1.5 lakhs at the rate of 10%. How much is that? 15,000. Correct or not? So this is the basic tax. Now from your basic tax, you will subtract what? Rebate under section 87A. Why are you giving rebate? Because the net taxable income is lesser than or equal to 5 lakhs. So you will give a rebate of 5,000 rupees and therefore it is 10,000 plus. Do not forget your EC and SHEC, 2% and 1%. So here 200 and here 200 or 20. So 10,300 rupees. Are we clear with this? Okay. Now I'll take you to the next concept. If you notice carefully, under the table given there is a point called as surcharge. What is surcharge? The word itself suggests it is tax on tax. Now like I told you, in India we follow progressive system. Are you noticing that for all those people who are earning more than 10 lakhs, the rate of tax is stagnant at 30%? Yes. So they wanted to put some additional burden on these people. So they said, not only do you pay the basic tax, you also pay tax on tax, surcharge. And it applies when surcharge for individuals for assessment year 17-18 is 15% if the income exceeds 1 crore. So you guys tell me, if the net taxable income of a person is exactly 1 crore, what would be the tax? Come on, calculate fast. I think now you can slowly do it only on the calculator. 0 to 2.5 lakhs nil, 2.5 lakhs to 5 lakhs 25,000, 5 lakhs to 10 lakhs 1 lakh, 10 lakhs to 1 crore, that is 90 lakhs pay 30%, 27 lakhs, 27 lakhs plus 1 lakh 28 lakhs plus 25,000, 28 lakh 25,000. Very good. So the basic tax here is coming to 28 lakhs 25,000. Will you add surcharge? Will you add surcharge? What did I say? 15% surcharge is applicable only if the income exceeds 1 crore. So for a person who is earning exactly 1 crore, will there be surcharge? No, there is no concept of surcharge. So, but will you add your EC and SHEC? Of course, we'll come to that later on. What if there is an individual who is earning 1 lakh 5,000, marginally greater than 1 crore? Let's find out the tax for this guy. Same thing, do again. 0 to 2.5 lakhs nil, 2.5 lakhs to 5 lakhs 25,000, 5 lakhs to 10 lakhs, 1 lakh, 10 lakhs to 1 crore 5,000. 28 lakhs 26,500. Come on, I want all participation involved. Now you tell me, will there be a concept of surcharge for this guy? Because his income has exceeded 1 crore, will we have surcharge also? Now remember, surcharge is tax on tax. Collect your book also, your module is there. Tax on tax, so do 15% on this. 4,23,975. Acha, now what is the basic total tax? 30? 50? And have you noticed one thing? Just because of an increase of how much? 5,000 rupees. How much is the addition in the tax? Do this minus this and tell me. 4,25,470. Is this fair? Do you think it is fair? By no means of imagination, just because an individual has earned 5,000 as compared to an individual earning exactly 1 crore, he ends up flushing out so much more money. And that is why we have a concept of marginal relief. What is marginal relief? Marginal relief is applicable only to those cases where the income is marginally exceeding 1 crore and due to which surcharge becomes applicable. Now the concept of marginal relief is quite simple. What is the concept here? The additional tax payable shall not exceed the additional income. Now you tell me, his additional income is only 5,000. The additional tax payable is 4,25,000 whatever. So we have to give him something called as marginal relief of how much? Do this minus this. 4,20,475 rupees marginal relief. So what is his now basic tax payable? 28 lakh 30,000. Now let's compare. 28 lakh 25,000 was what he was paying had he earned 1 crore. If he is earning 1 crore 5 lakhs, sorry, 1 crore 5,000, then he is paying 28 lakhs 30,000. So if you see the difference, it will exactly be equal to 5,000. So is this fair enough? Is this fair enough? I am not saying, ayyo, whether you earn 1 crore or 1 crore 5, it makes no difference because you are left with the same thing. That's one opinion. But think on the brighter side. On the brighter side, should we appreciate the fact that this SSE is getting something called as marginal relief? Yes. So overall, the picture for an individual is quite clear to you. The basic slab rates 0 to 2.5, 2.5 to 5, 5 lakhs to 10 lakhs. The concept of rebate under section 87A. The concept of rounding off under 288A and 288B. And of course, the concept of surcharge if the income exceeds 1 crore, an additional surcharge of 15%. Are we clear with this? Sure? Okay. Now, if this individual is a resident, when we go forward, when we go to section 6, we'll understand who is resident, who is non-resident. For the time being, just understand what I say. If there is an individual who is a resident, who is 60 or greater than 60 years during any part of the year, of course, what I am referring to is a senior citizen, then the slab rates change. If you see the second table, what is the slab rate for a senior citizen in our country? Is it 2.5? No, it is 3 lakhs. So 0 to 3 lakhs, there is no tax. 3 lakhs to 5 lakhs? 5 lakhs to 10 lakhs? Above 10 lakhs? 30%. And of course, is there surcharge for senior citizen also? Yes, there is surcharge for senior citizen also. So everything remains the same except the fact that instead of 2.5 lakhs for a senior citizen, that is 60 years or more, it will be 3 lakhs. Come to your next page, you will find the provisions for a super senior citizen. Who is a super senior citizen first of all? 80 years or more. And please remember, the benefit of senior citizen or super senior citizen will be available only to a resident individual. To put it differently, if there is a non-resident who is 85 years, will he get the benefit of the beneficiary provisions, or will he still be applied 2.5 lakhs? 2.5 lakhs. Chalo, let's see for super senior citizen, what is it? What is the basic exemption limit for super senior citizen? 5 lakhs. Wow, 0 to 5 lakhs, there is no tax at all. Acha, 5 lakhs to 10 lakhs. Have you noticed for a super senior citizen, there is no slab of 10%, straightforward 20. Acha, 5 lakhs to 10 lakhs? 5 lakhs to 10 lakhs? 20%. Above 10 lakhs? 30%. Is surcharge applicable for such person also? Yes, surcharge is applicable for such person also. So as far as individuals, you are perfect. So let me give you a small test. Let's understand whether you understood. Let's say there is one Mr. Tanappa. He is a non-resident, 85 years old, earning 4,50,000 rupees. What is the tax payable? Nilla. So what is the basic exemption limit that you are applying? Acha, 0 to 2.5 lakhs nil, 2.5 lakhs to 4.5 lakhs on 2 lakh rupees you are applying how much? 10%, that is 20,000 plus EC plus SHEC. Are you giving rebate? No. Rebate also is applicable only for an individual resident. Please remember, if the SSE is a non-resident, he will not get the benefit of rebate also. Are we crystal clear with the tax rates for an individual? Okay, super. We'll come to the tax rates of other SSEs later on, but now let us jump into the subject. Chalo. So I was telling you yesterday that your income tax portion consists of 4 parts. On the first page, I want you to write down what these 4 parts are. The first part of your portion is the Income Tax Act 1961. The Income Tax Act 1961. The second part of your portion is the Income Tax Rules 1962. The third part, of course, any circulars or notifications issued by the central government or the CBDT. What is CBDT? Central Board of Direct Taxes. And last but not the least, we have a few case laws. Now, in your CPT, I do understand that you've gone through 3 acts. What are the 3 acts you already learned? Partnership, contract, and sale of goods, correct? So you must be having a fair idea of how the act is framed. Sections, subsections, clauses, subclauses, items, sub-items, explanations, provisos. Yes or no? Did any one of you study the BEAR Act? or did all of you do the institute material itself? Have you ever wondered how the BEAR Act, what is BEAR Act? BEAR Act is the act as such. See, all the textbooks, all the books that we read, the books that I provided, they are not only the act, also it includes the author's comments. So, to become a true professional, one must always go through the BEAR Act. What is the law actually? What is the law actually? That's why you will find most of my book, I have not made many modifications to the act as such. I give the student the full act. I present the full act to you, all the sections, subsections as they are. What is the advantage of this? Yes, the book will get a little more lengthy, but at the end of the day, would you like to be a true professional or not? Tomorrow, when I am not available, do you think you must be able to read the act as such and interpret it by yourself? Yes. If everything is given in the form of bullet points to you and you start reading it that way, then you are not going to be spoon fed at GYAAN. Having said that, now the Income Tax Act 1961 is also framed like any other act. Section 1 of any act is what? Title, extent, commencement. Correct or not? Title, it may be called as the Income Tax Act. Extent, it applies to the whole of India. Whole of India. Please understand, is India defined somewhere? Yes, India is very much defined in Article 1 of our Constitution. For the time being, remember 4 elements of India. India means and includes, number 1, the landmass. Number 2, the territorial waters. Number 3, the seabed and subsoil. Number 4, the air above. The 4 elements of India, what are they? Number 1, landmass. Number 2, territorial waters. Number 3, seabed and subsoil. And number 4, air above. Of course, as we go further into the subject, we will understand what territorial waters are, how many nautical miles and so on. Coming back. So, title we know, extent we know, commencement. Income Tax Act 1961 commences from assessment year beginning 1st April 1962. That means which is the first assessment year which was assessed under this act? 1962-63. Are we clear? Okay. Of course, then we have the income tax rules, notifications, circulars, case laws. Coming back to the Income Tax Act, Section 2 of any act, what does it talk about? Definitions, very good. So, when do we refer to these definitions? We refer to definitions when we require interpretation of a particular term. Please remember, never look at definitions with the aim of by-hearting them. You have to look at definitions when you need to understand the term. So, let us go to Section 3. Section 3 defines what is a previous year. And why is it required to define a previous year? You will understand that if you first read Section 4. Section 4 is the charging section. Charging section is like a receptionist. What does the receptionist do in any organization? When you came to GYAAN Academy, what did the receptionist do for you? How many of you interacted with the receptionist? Most of you. I know most of you would have interacted, and when I say receptionist, it could include me also if I was sitting at the front desk. So, you would have interacted with somebody, right? That somebody, did that somebody only teach you everything at the table, or did that somebody simply direct you saying, okay, so you want tax classes, you want accounting classes, you want so and so classes, go to class number so and so, faculty is so and so, fees is so and so, timings are so and so. This is what you got information, right? Similarly, the charging section, the receptionist of the Income Tax Act is Section 4. Section 4 welcomes you to the Income Tax Act. Namaste, welcome to the Income Tax Act. And what are we going to do here? Let's read that Section 4. Come on, let's read the charging section. Come to page number 2 of topic Basic Concepts. And preferably I would like you to carry a highlighter from tomorrow. Anybody else who hasn't got modules? Chalo, let's read Income Tax Act section 4. Subsection 1, where any central act enacts that income tax shall be charged for any assessment year at any rate or rates, income tax at that rate or rates shall be charged for that year in accordance with and subject to this act in respect of the total income of the previous year of every person. There are 4 words that I had underlined for you. What are the 4 words? Assessment year, total income, previous year, every person. So to put it in simple line, the total income of every person of the previous year shall be charged at the rates applicable for the assessment year. Come on, let's write down this bullet point at the end of the page. You have some place there. First bullet point, the total income of every person of the previous year shall be taxable at the rates applicable for the assessment year. Shall be taxable at the rates applicable for the assessment year. So now we must understand each of these terms. I'm saying the total income of every person. Is this term income defined first of all? Is the term income defined? Is the term total income defined? If you see, there is a grey color box that I have inserted. I told you we will refer to definitions when we require to know the definition. So now it's high time that we know what is total income. And section 2, clause 45. Now one thing about section 2, keep this in mind. In section 2 there are no subsections. So when I say 245, it means section 2, is it subsection 45? No, it's not subsection, it is clause 45. Section 2 clause 45 says total income means the total income. No, total income means the total amount of income referred to in section 5, computed in the manner laid down in this act. Oh. So to understand what is total income, to understand the scope of this total income, we need to refer to section 5. And of course, the computation provisions are given thereafter. So we'll go to section 5 later on. But remember, where do we learn the scope of total income? In section 5. Beautiful. So we say the total income of every person. Is the term person defined? Yes or no? Yes. Where? Section 2? Clause 31. It says person includes. Underline the word includes. Definitions can be of 3 types. Either inclusive or exhaustive or negative. This kind of definition is called as an inclusive definition. Why? Because it starts off with the word includes. So person includes what all? An individual. Number 2, Hindu undivided family. Number 3, number 4, number 5, number 6, and number 7, every artificial juridical person not falling within any of the preceding subclauses. So 1, 2, 3, 4, 5, 6, 7 were what? Subclauses. So overall, there are 7 subclauses in the definition of person. Tell me again, number 1, number 2, number 3, number 4, number 5, number 6, and number 7, artificial juridical person, AJP. Okay. As far as each one of this is concerned. We know individual, you and me are individuals. What is this term Hindu undivided family? Who constitutes an Hindu undivided family? Karta and co-partners. Acha, in India we have two schools of thought. Do you remember? Mitakshara and Dayabhaga. These are two schools of thought in Hindu undivided family. You must have learned this somewhere. Acha. What is the difference between Mitakshara and Dayabhaga?
In Mitakshara, the girls are also included in the Hindu undivided family.
So in Dayabhaga?
The girls are not included.
No, definitely in both schools, whether it is Mitakshara or Dayabhaga, girls are given equal right. One small point that he is noted, Dayabhaga is more prevalent in two states in our country, Assam and West Bengal. So, but what is the basic difference in these two?
If anyone burns, they will not get the right on property in Dayabhaga, I guess, sir.
If everyone?
If suppose any individual burns in the family of Dayabhaga, he will not get the right on property. But in case of Mitakshara, he will get the right of property in the instance of his birth only.
Perfect. In case of Mitakshara, a share or right in property is derived at the instance of birth. That means as soon as a person is born into the family, he gets a share in the property. Whereas in Dayabhaga, he gets a share in the property on the demise of his, successor, predecessors, my bad. So there's a difference here in Mitakshara at birth, here on demise of the predecessor. That is the major difference between both Mitakshara and Dayabhaga. Anyways, we are not bothered about that. Tell me one thing, when you say Hindu undivided family, are you saying it should consist only of Hindus? Can there be a Muslim undivided family, Christian undivided family? Will that also be governed by HUF, or is it only Hindus? Any religion. Let me get this straight. When you talk about HUF, it is only Hindu undivided family. It's only Hindu. Oh my God, but we are a secular country, then what about those families which are doing business together? Let's say it's a Christian undivided family. No problem. Do you see a term called as BOI, body of individuals? Yes. So if it's a Muslim undivided family or a Christian undivided family, then it would not be governed by HUF, but definitely they are also to be considered as a person, but as a body of individuals. And if you are wondering, are the tax rates for HUF and BOI the same? Yes, tax rates for HUF, BOI, AOP, AJP are the same. What is AOP? Association of Persons. What is AJP? Artificial Juridical Person. Very good. Having said that, once we know what is a person, total income of every person derived in the previous year. What is this term previous year? Is the term previous year defined? Yes. Of course, it is mentioned in section 3. Let's read it. Previous year means the financial year immediately preceding the assessment year. Wow. So, what is assessment year? Is the term assessment year defined? Yes, section 2 clause 9. Assessment year means the period of 12 months commencing on the 1st of April every year. Now currently for May 2017 and November 2017, the assessment year is 17-18, starting from 1st of April 2017 till the 31st of March 2018. What is your previous year? 16-17, 1st April 2016 to 31st March 2017. There is a small proviso in section 3. Remember, proviso means a paragraph inserted in the act starting with the words provided that. Proviso can be an exception, proviso can be a condition. So let's see whether this is an exception or a condition. He says, provided that in the case of a business or profession newly set up or a source of income newly coming into existence, underline the words newly set up or source newly coming into existence, in the said financial year, the previous year shall be the period beginning with the date of setting up of the business or profession, or as the case may be, the date on which the source of income newly comes into existence and ending with the said financial year. To put it in simple words for you, let us say one of our friends qualified CA final recently. correct? So let us say he set up his profession today, okay. So today is the 4th of February. So what is the first previous year for our friend who is having a new source of income, a new profession set up today, the 4th of February 2017? What is his first previous year? It is nothing but the period starting from today till 31st March 2017, which means the first previous year can be 12 months or lesser than 12 months. This is the only thing I want you to remember. The first previous year can be 12 months or something lesser than 12 months, but subsequent previous years will always be 12 months. See, I qualified my chartered accountancy in 2011, correct? So for me, my first previous year was 11-12, 12-13, 13-14, 14-15, 15-16 and 16-17. So technically speaking, this is my 6th previous year. Are we clear with this? Okay, super. So we understand section 4. Section 4 basically says the total income of every person in the previous year shall be chargeable to tax in the assessment year. This is the general rule. This is the general rule. There are certain exceptions to this general rule given by section 4. What are these exceptions? There are certain circumstances where the income earned in the previous year is to be paid also in the previous year by treating the previous year as the assessment year. Let us look at these exceptions. Turn your page and you will find section 172. Page number 5, you will find section 172. On top of page number 5, I want you to put a heading, exceptions to section 4. Exceptions to section 4. Now let's understand, what does section 172 say? The intent of 172, I want you guys to be attentive. The intent of section 172 is primarily to ensure that people in occasional shipping business, see, let's say there's a ship which comes to the Indian port, must be either to drop off or to pick up certain goods, passengers or livestock. Let's say the ship is not registered in our country, it's a foreign ship, it's a ship owned by a non-resident. I want to know, let's say the non-resident comes, he does business, he collects freight from people here or from people outside to carry goods inwards or outwards. My idea, do you think after he goes away from the jurisdiction of India, next year will he again come to pay the tax? He may or he may not, correct? If he is honest, he will come back. But there is a chance that he is dishonest? Yes or no? See, because he is not in the occasional shipping business, he is in non-occasional, he is only in occasional shipping business. That means it's not his day-to-day routine, or India is not his designated port. Having said that, what does section 172 say? The intent of 172 is to collect the tax on the freight charges then and there itself. When I say then and there, what am I referring to? I am saying section 172 puts a liability on the master of the ship. Section 172 says, boss, if you want to leave the port, pay the tax. Simple logic. You want to leave the port, and I am not saying don't leave the port. I am only asking you to pay the tax. Now you might ask, how can he compute his income? How can he compute his income? How will you know what is the amount of tax payable for that particular fare, for that particular voyage? The answer to that is in section 172 itself. Section 172 says, whatever is the amount of freight collected, which is treated as Indian income, 7.5% of such amount shall be treated as deemed income. Oh, quite simple. So let's say there's a person who's collected 10 lakh rupees freight. So what is his deemed income? 75,000. Simple or not? Whatever is the freight collected, multiply into 7.5%, that is your deemed income. And on this deemed income, pay the tax. So, for non-residents, we learn the tax rates later on, 40%. So, 75,000 into 40%, pay it off plus 3% cess, and you are free to go. This is called payment under section 172. 172 in itself is a charging section. Have you noticed?
Yes, yes.
It is not following section 4. 172 in itself is a charging section. 172 says what? If you are a ship owned by a non-resident in occasional shipping business, whatever is the freight collected into 7.5% is treated as your deemed income and tax should be paid accordingly. When should it be paid? Before he receives the let go order. Of course, when we come to customs, we will learn what is this let go order. Now, this master of the ship sometimes, due to want of information, see, all information might not be readily available sometimes. But at the same time, can you restrict these people from shipping? Can you delay their activity just because information has not come? So, there is an embedded provision in section 172 which says, if the master of the ship designates a person and that such person authorizes and accepts the responsibility of doing what? Of filing the return and paying the taxes within a period of 30 days from the date of departure of the vessel, then also it is deemed compliance. Wow! That means, is there a solution to the problem in the charging section itself? Section 172 only says, see, if you are unable for want of information, the assessing officer may extend the time, you may leave, but please appoint an agent. This agent will be responsible for two things, one to file the return and two to pay off the taxes within a period of 30 days. Is this fair enough?
Yes.
Yes. So, 172 is an exception to section 4. Section 4 says AY, PY are different. 172 says the PY only shall be treated as the AY. The next section after 172, we have section 174. Now, please remember, this is only for your idea. When you go back home, you can read carefully the provisions. Okay. So, first you need to get an idea, because whatever is in the grey color box is just for an idea, so that tomorrow you don't miss out on anything. If somebody walks up to you and says, hey, do you know the provisions of 172? You should not say, ah. So, some. Section 174, he talks about assessment of persons leaving India. How in the world will the income tax department get to know that you want to leave India this year? Let's say, now we are almost at the year end for previous year 16-17, right? So, let us say my plan is, after this year is over, I want to leave this country and go. So, nobody can collect tax from me. How will the department know that there is one person, so and so? What is the probability of they catching me? You must be thinking the probability that the income tax department catches me is 1 divided by 127 crore population. No, it's not so bad. Some people, they ask, sir, what is the probability that they catch me only? The probability that they catch you, yes, if you are a pure mathematician, the answer is quite clear, 1 by 127 crore. But do you think it's so bad? Do you think the income tax department is so unknowledgeable of the fact that you are leaving India? How do you think they can get this information? One very good means, you apply for visa. If you are applying for tourist visa, what is your intention? To leave our country forever or to come back? Come back. You are applying for another kind of visa where you want to permanently leave our country. Do you think this is a clear indication of your intent? Yes or no? So, in such cases, the assessing officer has a power under section 174. See, 174 empowers the assessing officer. It gives power to the assessing officer. Assessing officer will come and ask you, I have received the fact that you are planning to leave our country. Come on, whatever you have earned until the effective, let's say you are planning to leave India in the next 2.5 months. Until that day, whatever is the income, compute, pay the tax, then you go. I am not saying I will restrict you from going, but definitely if you do not pay, I will do so. So 174, is it an empowering section or not? Do you think it empowers the assessing officer, the income tax department to take some action? What is that some action? To treat the PY as the AY. Are we clear with section 174? What is the next section? Can you see section 174A? It says assessment of AOP or BOI or AJP formed for a particular event or purpose. Let us take the most simple example. In India, we have a lot of festivals, right?
Yes, sir.
Diwali, Sankranti, Holi, whatnot. So let's say a couple of friends, group of friends, they decide, hey, this Diwali, let us do something worthwhile. Let us promote a very silent cracker or non-pollution cracker or whatever. Let us open our own business. Now you tell me, this business that these group of friends intend to open, is this for a long-term perspective with a going concern? Or is it for a short period of time where they are going to make money, split the profits and leave? Long term or short term? Definitely it is short term. So obviously this group of friends will go take registration under the Shops and Establishments Act or whatever rules are applicable. They will open this so-called store, they will make their money, they will earn their profits, they will split the profits in whatever was the intended ratio, and very honestly they will meet again next year to pay the tax. Huh? Your smiles tell me how honest you are. You understand the honesty here very well, right? So, to safeguard this kind of scenario, to safeguard scenarios where association of persons, body of individuals, artificial juridical persons are created for an event or a purpose, the tax is to be paid immediately. The PY only shall be treated as the AY. Are we clear with the section? Okay. After that, can you see section 175? Assessment of persons likely to transfer property to avoid tax. I want you to read this. He says, notwithstanding anything contained in section 4. So what do these wordings mean? Notwithstanding anything contained in section 4. Technically, such a provision is called as an overriding provision. You can underline it and tell it for the first time. Write down there, overriding provision. If it appears to the assessing officer during any current assessment year that any person is likely to charge, sell, transfer, dispose or otherwise part with any of his assets with a view to avoiding payment of any liability under the provisions of this act, the total income of such person for the period from the expiry of the previous year for that assessment year to the date when the assessing officer commences proceedings under this section shall be chargeable to tax in that assessment year, and the provisions of subsections 2, 3, 4, 5 and 6 of section 174 shall, so far as may be, apply to any proceedings in the case of any such person as they apply in the case of persons leaving India. Oh. Let me take a small example. Let us say there is a company having good amount of assets, in the past has earned a lot of profit, and small non-compliance, they forgot to pay income tax. Can you forget to pay income tax? No. Please understand. Yes, sir. Ignorance of law is an excuse or not an excuse? Is not an excuse. You cannot say, "Arey sir, I never went to any class to learn income tax, therefore I never knew there is a concept of income tax." So this company, they had some non-compliance with income tax. Notice was served to them. Of course, Now the directors of the company were cautiously thinking of the future of the company. So one of the directors got a beautiful idea. What did the director say? We'll do one thing. Whatever assets we have in this company, we will transfer to another company, or we will demerge the company only best. Because if you transfer also, again consideration will come. So they might take off the consideration. We'll do one thing. We will demerge this company. We will make two companies out of this. We will remove all our precious assets, land, building, whatnot, open a new company. Fresh start we'll have. And this company, we will leave it for the income tax department. Let them do whatever they want. Our shareholders should be safe. Do you think this is possible?
Yes.
Some brains might work and say, yes sir, why not? Demerger is something that you all know. Yes, you understand what is demerger.
Yes.
How do you tackle this? They have a provision. What does the section say? Where the assessing officer is of the opinion that you might transfer property to avoid payment of tax, what is the power that he has? He will treat PY as AY and ask you to pay tax immediately. Then he will say, hello, till I give NOC, no objection certificate, you cannot transfer assets. Registrar will not transfer and take registration. No person who is buying also, anyone wants to buy your asset, first thing that generally they ask is an NOC. Let's say another company wants to buy, they will say, where is the encumbrance certificate, where is the NOC? Income tax department can get involved. So is this a safeguarding provision for the income tax department? Yes, very good. So we understand this. Section 175, understood. Let's go to the next section, section 176. Discontinued business. I want to know, is there a difference between discontinuation and liquidation or dissolution? What is the difference between discontinuance of business and liquidation of a company or dissolution of a firm? Please remember, discontinuation of business means the entity is intact. Discontinuation means that the entity is intact, business is discontinued. Yes or no? For example, there is a company which is into sale of petroleum products. They set up gas stations at a huge scale. And then this company realized that, okay, we have a small problem, let us discontinue this business. Is it that the company is gone? Is it that, oh my God, company has winded up? No, they have only discontinued business. Now, whenever you discontinue any business, there is a possibility that either you dissolve or you start a new business or you restart the existing business. There are many possibilities, right? Yes. So in such a scenario, the assessing officer will obviously look into the facts and circumstances of the case. The assessing officer will try to establish whether income tax department is at a risk of non-collection of taxes or not. For example, if I have 4 very strong promoters with good financial backing, I am the assessing officer, suppose. Very good promoters, good financial backing, company has done very well in the past. Of course, due to very obvious scenarios, the business was not doing so well in the last few years, and therefore they decided to discontinue. So one of the directors, Prerna, came and told me, we are planning to discontinue the business, and of course the future looks very bright. We are going to start another business. This is our business plan. This is what we propose. So as an assessing officer, I am just trying to get an idea of what they are planning to do. Section 176 empowers the assessing officer if he wishes to treat PY as AY, which means as an assessing officer, I have a power. What? If I believe them, I will not put section 176 into compliance. If I think, no, these people might not get back on track, will I collect my taxes and come out of the picture? Yes. That's why the word used in section 176 is not shall, it's may. Can you see? He says, notwithstanding anything contained in section 4 where any business or profession is discontinued in any assessment year, the income for the period from the expiry of the previous year for that assessment year up to the date of such discontinuance may, at the direction of the assessing officer, be charged to tax in that assessment year. Oh, agar wo chahe to, if he wants to, then he may treat PY as AY. Otherwise, can he say, okay, I believe you guys, it's no problem, I will not enforce section 176, continue, and accordingly pay your advance taxes, file your return of income in the normal course of the act? Yes. So are we clear with all the exceptions to section 4? Again, just a quick recap. Section 4, what did it say? Section 4 says, the total income of every person of the previous year shall be charged to tax in the assessment year. The term total income, we have to refer to section 5. The term person is defined in section 2, clause 31. The term previous year is mentioned in section 3. The term assessment year is mentioned or defined in section 2, clause 9. There are a few exceptions to section 4. What are they? Section 172 talking about shipping of non-residents. 174 persons leaving India. 174A for a short event or purpose. 175 and 176. Are we clear with this? Chalo. You can take a break of 15 minutes, and then once we come back, we will then explore this section 5. What will section 5 talk about? Scope of total income. Section 5 will tell us what is the basis of taxation in our country. See, different countries follow different bases of taxation. It could be based upon citizenship. It could be based upon the state in which you are living. In our country, taxation is based upon the residential status. So, when we come back, we will understand how to determine residential status and how this residential status affects the scope of total income. Chalo.